Throughout our 31-year history, we've been very focused on shorting individual stocks that we believe will underperform the market and add value through that underperformance. That ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, AI is going to impact virtually every industry we can think of.
Lee Ainslie's path to the hedge fund world was anything but conventional. With no early ties to finance, he set his sights on business and applied to Stanford.
Luckily, they said, Lee, we don't share your interest in our attending Stanford Business School. So I owe a great debt of gratitude to the Director of Admissions of Stanford.
That rejection led Ainslie to the University of North Carolina, where he crossed paths with legendary investor Julian Robertson, founder of Tiger Management and one of the pioneers of the hedge fund industry. Ainslie was among the first Tiger Cubs, joining the firm as a technology analyst. It wasn't long before he decided to forge his own path.
It was a Friday. He said I was crazy. It was a subtle way to put it. Had some other adjectives involved, and I came back Monday morning and told him my mind had not changed.
In 1993, at just 28 years old, Ainslie founded Maverick Capital with backing from the Wiley family and a belief in deep, fundamental research.
We're simply trying to understand the dynamics behind different stocks, identify those that we think are long-term winners and long-term losers.
Today, Maverick manages more than $10 billion across both public and private investments. And while the hedge fund world has evolved significantly over the years, Ainslie's disciplined approach has remained constant.
That ability to have a fresh perspective, even when things aren't going the way that you'd expect or to hope, really a critical part of the business.
Ainslie has embraced innovation, including AI, but still sees steady leadership and deep moats as the key to enduring success.
I've always felt good management teams deliver good surprises and bad management teams deliver bad surprises.
From Tiger Cub to Maverick founder, Ainslie has built a firm and a legacy grounded in research, discipline, and having a long-term view.
First of all, I'm a very competitive person, and I see the scoreboard every hour, and it's one of the few jobs where you know exactly how you and your team is doing. Secondly, it's one of the few jobs where I get to learn every day.
So when people think of hedge funds, they often think of very complicated algorithms and people trading every hour on the hour, every minute on the minute. You have built a hedge fund that's very successful, but it tends to hold on to stocks for very, very long periods of time, which is different than some of your peers. So can you explain your investment philosophy?
Well, the term hedge funds has obviously come to represent a wide range of different strategies, many ways to skin a cat. And you're correct, many use a lot of exotic instruments, many are very trading oriented. By contrast, we've always thought of ourselves as investors. We're simply trying to understand the dynamics behind different stocks, identify those that we think are long-term winners and long-term losers, and then hopefully recognize discrepancies between our views and the views of the market, and to take advantage of those. And so to do that requires a great deal of intensive fundamental research, which doesn't really lend itself to a lot of turnover, a lot of trading, but we really want to get to know our companies quite well. And to your point, we typically are pretty long-term holders.
When you buy a stock, you typically hold it for 3 years or so, something like that?
Well, the average ends up being a little over 1 year. If you look at one of our largest positions today, we've owned it for 8 years. And indeed, we first bought it in 2000 and have owned it for the majority of the time since 2000. So our core holdings end up typically being multi-year holdings, but there are a lot of shorter term investments as well. Sometimes because you recognize you made a mistake, sometimes because others see some of the qualities that you're excited about in the stock in the first place. And so that difference in what you view as the value, what the market views as the value, has shrunk to the point you think there are more attractive opportunities elsewhere.
But you also short stocks as well, which is more complicated than buying long, I think. But tell me why you short stocks. Does that make it more difficult to talk to CEOs when you're shorting their companies?
So in our core hedge funds, we try to maintain a balance of long and short investments. For our hedge fund, shorting is a really important part of that strategy. It can be more challenging for a few reasons. You're absolutely correct. Management teams are a little less excited to talk to you if they think you're shorting their stock. Unlimited losses versus the long side, the worst I can do is to lose 100%. On the short side, you can lose a multiple of your investment. you're never writing your winners. On the long side, I'm right. That position becomes larger. On the short side is when I'm wrong, that the position becomes larger. So, and I can go on. So there are a lot of challenges shorting stocks, and I think that's one of the aspects of Maverick that has distinguished us from many of our peers is throughout our 31-year history, we've been very focused on shorting individual stocks that we believe will underperform the market and add value through that underperformance. And as a result of maintaining that balance, we really have not had a lot of correlation to the markets over time.
Now, as we talk, the big, beautiful bill has passed Congress and the president has signed it. Does that affect you one way or the other? Do you really care about things in the big, beautiful bill, or really you're not a macro kind of investor, so inflation rate, interest rates, the value of the dollar is not a big deal to you? Is that fair or not?
It's certainly fair for the large majority of the time, again, by being hedged and thinking about our factor biases, et cetera. Hopefully, we're not really influenced in a significant way by those macro variables. Having said that, there are periods of time where those macro variables are extraordinarily important to the stock market and to individual stocks. The financial crisis, inflation and rapid rise in rates in 22, discussion of tariffs. I think it'd be really hard to invest and just have your head in the sand and not understand the ramifications of that.
Do you mostly invest in the United States, or do you actually invest a lot outside as well?
We've been international investors from day one. Indeed, if you look at this year, emerging markets has been the biggest driver of our returns.
So as you look at the U.S. economy today, we're not in a recession, unemployment's low, inflation's coming down. Do you have a big worry about the U.S. economy?
Certainly worry. I wouldn't say I think it's likely. There are two individuals, Ben Silver and David Tikhonczynski, who have been in charge of running the public funds for over 4 years now. They are a little less concerned than I am about the impact of tariffs. I still have in the back of my mind that we could see the double whammy of both the slowdown in growth with some inflationary impacts as well, but we'll have to see how that plays out.
So when you're looking at a company that you want to buy and the staff comes in and recommends it and so forth, what are the key things you're looking for? A good CEO, a kind of moat around it so there's not a lot of competition, let's say, that can overcome the company. What are the things you most look for in a company you're going to buy long on?
So at our 30th annual meeting a couple years ago, and at the annual meeting, we showed some of our very original presentation we put together back in 1994. While we worked really hard year in and year out to improve our abilities, what we're looking for in different investments, our investment strategy has been very consistent throughout. Yes, moats. We're trying to think about different secular trends that should persist, competitive dynamics among different companies, the quality of management teams, and I think this is one area we probably put much more emphasis on than many. I've always felt good management teams deliver good surprises and bad management teams deliver bad surprises. And that's endured. Looking for those characteristics has served us well for a long time.
So the hardest thing in the investment world, I often think, is admitting a mistake. At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
I really think that's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize the depth of potential long-term success. And yet on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not? Much easier said than done, but really a critical part of the business.
So the hedge fund world, since you first joined it with the Julian Robertson and since you started Maverick, how has it really changed? When
I first was at Tiger, having a 2-martini lunch was a pretty common experience for the older crowd. 10Qs showed up in the mail. So it was a much less competitive, slower period for the investing world. Starting a hedge fund today, I would argue, is much easier because back in '93 when we started, there were a lot of things we basically had to build from scratch. So people just did not have these systems. And the fact I had a background in technology and engineering was very helpful. Today, the drop of the hat, a prime broker can, boom, put on your desktop sophisticated risk management systems, all the trading systems you need, et cetera, et cetera, et cetera. Having said all that, I would argue being successful today is much more challenging because the world is far more competitive.
So artificial intelligence has come along and everybody's excited about it, though people 5 years ago barely knew what it was. Is there something you think might succeed artificial intelligence as the next best thing that people are going to be excited about in the investment world, or something else in the technology world in the next 5 years or so?
The day the iPhone was introduced, Nokia and Apple both had market caps of $80 billion. 5 years later, Apple was $400 billion, Nokia was $20 billion. So 20-fold difference. That's just one small example of the impact innovation can have. AI is going to impact virtually every industry we can think of. So when I think of the next steps, they actually, in my mind, will be AI driven. I think robotics will be a very real, very pervasive part of our lives. Something with that self-driving cars or something doing your laundry. A lot of this is going to require energy in abundance that is virtually free, but I think the rate of change is accelerating, and that it's almost hard to imagine where we're going to be in 10 or 20 years. It was a Friday. He said I was crazy, had some other adjectives involved, and asked me to consider it over the weekend, and I came back Monday morning and told him my mind had not changed.
Let's talk about your own background and then how you came to start Maverick. So where were you born?
Born in Alexandria, Virginia, outside of D.C.
What did your parents do?
My father was a teacher and eventually was the head of two different schools. And my mother was an accountant.
So you went to college in Virginia?
I did.
At the University of Virginia?
Correct.
And then what did you do after you graduated?
I was an engineering student, undergrad, and I went on to be a consultant on the technology side right after college.
And then you decided to go to business school?
I did.
And you applied to Stanford Business School?
I did.
And what did they say?
Luckily, they said, Lee, we don't share your interest in our attending Stanford Business School. And I say luckily because as a result, I went to the University of North Carolina for business school. There I was asked to work with the board on a couple different things. And there was a board member named Julian Robertson who ran the Tiger Fund. At that point in time, Tiger had not really hired business school students. I had developed an interest in stocks when I was in 8th grade, and it was still my hobby at that point in time. So Julian and I spent a lot of time talking about stocks. And for me, it was like talking about basketball with Michael Jordan. I just thought this was so amazing, but it never really crossed my mind it could be a job opportunity. As a matter of fact, I'd accepted a job to go work at Goldman Sachs, and about 2 weeks after that, I got a phone call from Julian asking if I would consider working there, which I ended up doing. And to me, that was one of the great breaks in my life, so I owe a great debt of gratitude to the Director of Admissions of Stanford.
So you went to work for Julian Robertson, who was one of the leading hedge fund people at the time when there weren't that many hedge funds. So what did you specialize in there?
Well, the first few months I was a generalist and spent a lot of time on consumer and retail, but after a few months they asked me to lead the technology investing efforts. And so the rest of my career there I was focused on tech.
And did you have mentors there to help you?
There's a guy named Steve Mandel, who's still a very good friend. He joined Tiger just a couple months before I did, but I was coming right out of business school and he had already been in Goldman for 8 years. And he took me under his wing, and it was really, I got that promotion to take over the technology sector rather quickly, which is really on the advice of Steve to join. So Steve's another person I know a great deal to.
So after 3 years there, and you're doing well, presumably, Julian likes you, Steve Mandel is mentoring you, you go to Julian and say, you know what, I'm going to start my own hedge fund. What prompted you to leave after those 3 years?
It was a Friday. He said I was crazy. It was a subtle way to put it. Had some other adjectives involved, and asked me to consider it over the weekend. And I came back Monday morning and told him my mind had not changed. And that was a really tough conversation because Julian had been incredibly generous, kind, gave me this great opportunity. But I really, and in hindsight, I was a little naive and probably a little arrogant, and I had probably a little more confidence than I should have in my ability to succeed. But thanks to a family called the Wiley family, Sam and Charles Wiley, they were willing to back me and gave me an opportunity to start something on my own.
So at Maverick today, are you responsible for every investment decision? Do you have to approve every single investment decision that's made?
So I gave up day-to-day responsibility on the public side about 13 years ago, and for the last 4+ years, Ben Silver and David Tikhonczynski have had those responsibilities, and they've done an amazing job. On the private side, early stage investments have been led by David Singer for the last 20 years, and Maverick Ventures is our second important business. And then the third business today is Maverick Silicon, which is a fund that will focus on late stage, or is focusing on late stage private companies, trying to address the insatiable demand for compute and AI infrastructure, and that's led by Andrew Homan. So those are the individuals making all the day-to-day investment decisions.
So today, your job is to oversee your professionals, but once a week, do you review the portfolio and say, this is good, this is not good, or how do you oversee this?
We have in-depth discussions. We officially meet every 2 weeks on the public side, and I'm not shy to weigh in and give advice when I think there's something that we may want to think about twice. But again, I have great confidence and respect for those individuals and don't really want to be over their shoulder nitpicking day in and day out.
Parents are often concerned these days that their child won't get a job at a place like Maverick or Google or Goldman if they don't major in a STEM subject, science, technology, engineering, or math. Do you have a view that it makes a difference what you major in before you hire somebody?
I think 5 years ago or 3 years ago, I would have said STEM is something you really need to give serious consideration to. I think AI is changing that. And a lot of the disciplines that are very helpful from a STEM background, AI is probably already doing quite effectively. As again, a son of an educator and been involved in a lot of different schools, I've been very proactive in working with these schools, making sure they're not fighting AI. Don't make AI illegal, you're not allowed to use it. On the contrary, teach them how to use it, embrace AI. Because the folks coming out of college now and over the next several years, if AI is not a tool that they're very comfortable with, and they're not able to add value in other ways, they're going to have a tough career. So I think the world's changing quickly in this regard as we speak.
I think we'll be at the point at some point in the future where AI itself will make the investment decisions for hedge funds like yours, where you won't need as many people, you just rely on some kind of AI, or you don't think we're going to get there anytime soon?
So again, hedge funds means a lot of things. So I think it depends on the strategy a bit. And one of the reasons we've always been very equity focused, whether it's private or public, is obviously that's the very end of the value stack of the enterprise value. So little changes in enterprise value can be big changes in equity. And B, companies run by people. And so understanding people, their motivations, their integrity, the quality of their decisions, et cetera, is such a valuable skill. And I would argue that is going to be the last frontier where humans will still do a demonstrably better job. Back to your question, I hope that's true for 10, 20, 30 years, but I don't think it'll be true forever. I'm a very competitive person, and it's one of the few jobs where you know exactly how you and your team is doing. I get to learn every day.
What are you looking for in young talent that comes out of business schools or has been already at another hedge fund?
I'd say a few things, and some of these are probably a bit obvious, but sense of dedication, competitiveness. Obviously, you need to be rather bright. Emotional consistency, we call it. So the highs aren't that high and the lows aren't that low. For us, a team orientation and interpersonal skills are really important. And so Maverick has a much stronger team culture than I think many hedge funds. And we succeed or we don't succeed as a team, and we're not really as focused as on an individual's contributions. In the investment business, if you're right, meaning I've picked a long that outperforms the market or a short that underperforms the market, 55% of the time, you're now one of the best in history. That's as good as you can do, which by definition means you're wrong 45% of the time, even if you're really good.
So suppose somebody comes to you and says, I like working at Maverick, it's very nice, but I want to start my own hedge fund, not unlike what you did. Do you throw them out the door right away, or you tell them not to do this, or it's not that easy to do, or what happens?
Well, we have always encouraged folks to be very open with us, whether they're thinking about starting their own fund or going to a competitor or whatever it may be, just because the earlier they tell us, the more we can prepare for potential departure. But more importantly, it really gives us the opportunity to give them some hopefully valuable feedback. I've had discussions where people have laid out an opportunity and I stand up and hug them and congratulate them. I'm excited for them. I've had discussions where I've said, oh gosh, you don't really understand what you're getting yourself into here. Let me walk through. Someone does want to potentially start a fund. I certainly understand that. I went through that myself. And we'll try to be supportive. I root for my quote unquote competitors. And certainly someone that's leaving Maverick, I'm going to do everything I can to help them be successful.
So if somebody asks you, what is the most common mistake that investors, average investors make, what would you say that is?
The world has become, and I think this is really true on the professional investment side, in the world of pod model multi-strats, most of those investors have very, very short time horizons, and they're very worried about my performance today and this week, which makes it really difficult to take a step back and think about where is the world going to be in 5 or 10 years and how is this stock going to fit into that. And then secondly, you mentioned this a bit earlier, just underestimating how important management teams are. You can have a great stock with great fundamentals, great competitive advantages, a deep moat, et cetera, et cetera, et cetera. But you put in a poor CEO who makes bad decisions regarding capital allocations, regarding how he promotes, manages others, et cetera, et cetera, et cetera, that you may have a very bad investment in your hands, even though the fundamentals were in your favor.
What is the best investment advice anybody ever gave to you?
I'd say 2 things. A, it's hard to be repetitive, but the importance of management. That was something that Julian really harped on. But secondly, just the importance of integrity. So when you're building relationships with the people I work with brokers on Wall Street, certainly with management teams, perhaps most importantly with our investors, if you're not constantly conducting yourself, and that's not true for me, but every member of our firm, with the utmost integrity and thinking about the ethics of every decision you're making, that doesn't really work in the investment business. Your career will be a short one.
So if somebody said to you, I got $1 million, I'm 30 years old, I don't really have to have current yield, I'm happy to take some capital appreciation risk, what would you recommend somebody do with $1 million or with $100,000?
I think on the longer term basis, you certainly want equity exposure. I personally think, a little bit like we were talking about earlier with hedge funds, likewise, active management on the long only side, there are a number of active managers that can do quite well and I think outperform the market over time. Majority do not. Therefore, if I'm investing a smaller amount of money, I'm probably looking at index fund. And I think a lot of it has to do with your risk tolerance, your age, your future needs of that capital, to what degree it's in a more conservative fixed income strategy versus equities.
What's the future of Maverick? Do you intend to run it as you are now for the next 10 years, 20 years? You're going to expand it?
Well, I'm certainly hoping my role for at least 10 years. We'll see if I make it 20. I'm very fortunate that we covered some of this earlier, but 3 different business units, each of which are led by very capable individuals. And so they'll be in place for a very long time. I love what I do. I'm very engaged. I stink at golf. So I don't really know what else I would do. So I plan on being in the seat for quite a while. This will sound corny, but collecting fond memories with family and friends is probably what I focus on more than anything else.
What is the excitement that gets you out of the bed every morning to be a hedge fund investor?
I'd say 3 things. First of all, I'm a very competitive person, and I see the scoreboard every hour. And it's one of the few jobs where you know exactly how you and your team is doing. I get to learn every day about companies, industries, macro influences. I'm very fortunate to work with these really talented, nice people that I find stimulating and fun to be with.